Hello and welcome to ICICIdirect. Today we'll be telling all our viewers all about the Mahindra Manulife Balanced Advantage Yojana. Joining us on the show today is Mr. Ashutosh Bishnoi, MD and CEO at Mahindra Manulife Investment Management. Ashutosh, thank you very much for joining us today on the show. Ashutosh, start by telling our viewers, why do you think balanced advantage category of funds is relevant in the current market conditions?
Thank you. Thank you for having me. Yes, you're right. The way we are positioned today in the marketplace, particularly in the equity and the debt markets, there is a whole bunch of people who made a lot of money in the equity markets over the last couple of years. Several of these people are really there because they had no alternative but to be in the equity market, because the earnings from any other market were not really looking very interesting. And they made a lot of money. So, what happens to people who are generally conservative, they make a lot of money, they start figuring, they don't want to lose this, what they have. Of course, there's a whole lot of other people who think that, every time the equity market drops, you should invest more. So people like me, right? But but there is a large number of people there who are concerned, and correctly so. If something runs up 60-70%, you're right to worry. So they would like to do something with their money which is different, and they don't know what, because interest rates are not looking good to them. There isn't really another asset that they can park. So what do? So the balanced advantage fund is a category which allows an investment manager to go 0 to 100% in debt or in equity, depending on how he's seeing the market roll out from here. And therefore, it requires what we call asset allocation expertise. It is almost like folklore in the investment markets that 80% of the outcome or performance of any portfolio is on account of asset allocation decisions, and about 20 to 30% is on picking the stock or picking the right security. And that's because, what does asset allocation mean? When do you put how much money in debt, equity, or cash? And that's a skill that an expert manager has, and maybe an ordinary investor himself may or may not have. So timing is perfect right now for balanced advantage funds, which can invest for their investors in the right space, given the outlook of where the market might go. So that's the reason why there's a lot of interest in this now.
Right. Ashutosh, what would then be the broad portfolio framework and investment style for this fund?
Right. So, we are looking at this fund currently from the point of view. First thing that we'd like to deliver very clearly and assure the investors that the taxation on this fund, we'd like to keep it such that they're able to take advantage of the equity orientation. Now, typically that happens in this fund because we will be able to use arbitrage positions. And arbitrage, as you know, the kind of return it gives is very similar to debt. So we may go all the way to almost 40 to 50% on arbitrage if we think that the debt market is looking more interesting than equity, and keep only about 35% in equity or maybe less. So that's the first goal. But the more important goal is look at where the earning is likely to come from. And the structure of the fund will move according to the mandate, which is go 0 to 100. In doing so, we've introduced an interesting risk management process. We believe that the actual fund manager who's going to be managing this fund, in this case, a gentleman called Manish, who works with us, he has a terrific track record, but we'd like him to have a 40% to 60% equity allocation as his realm of decision making. If he believes that the equity market is such that he can go below 40% in equity or above 60%, then he must carry along the decision with his CIO, which is Krishna Sangvi in our case. And between them, if they feel that it has to go below 30% in equity and above 70% in equity, they must make a case with the investment committee, and the investment committee must then give them an authority to go in the extreme directions. which means a considered view needs to be taken looking at the marketplace. Four things that we will consider very important to look at when seeing the allocation decision. Number one is clearly the valuation of the market, the historical and the future. Number two is the forecast of earnings and the performance against the forecast. Number three is the yield of equity versus yield of debt. Now, these two items move exactly in contrary to each other. They make a perfect inverse relationship. So when one begins to move in one direction, you know the other has to move as well. And finally, the liquidity in the market. There is so much liquidity coming in, driving the equities up. And if tomorrow, let's say RBI or Fed wakes up and says, hey, I need to support more by way of liquidity, well, that then becomes the driving consideration to allocate more to equity. So this is the kind of structure we have in mind with our balanced advantage fund.
Right. Ashutosh, what will then be the parameters for shortlisting sectors and stocks in the portfolio? What are the real big themes that you'd like to go with?
It's a very difficult choice at this point in time. In the Indian market, in the economy, almost everything is doing so well. If you look at manufacturing, manufacturing never had it so good. They have got, for new setups, they have only 15% tax. They get production linked incentives. There are being setups creating in India, being created for export by global majors. It started with telecom, but now we're seeing it in chemicals and textiles. It's coming in automotives because everybody wants to take advantage of the production benefits. And therefore, you're very tempted to go into the manufacturing. But on the other hand, when you look at services, of course, we've always had the IT space do well, which continues to do so. But now we have this new space, which is the digitized and the formalized economic space. That's a very interesting space. You're seeing people rapidly moving to ordering ordinary day-to-day stuff home, and it comes packed in boxes.
Mm-hmm.
Earlier, you used to go down to the little kirana shop and you used to buy stuff, no bill, nothing, and you weren't even bothered. But now all of this is coming in boxes with bills, with GST charge, and the guy who's getting it for you has got an additional job, and there is a logistics center somewhere sending it to you. So there's a massive economic setup. There's a servicing, there's a digitization space in all sorts of home and business situations. You have this company that sends you people if you want plumbing done, if you want a fan fixed, you want cleaning, right? So there is this whole economy that's beginning to take off, and that service economy is likely to drive our GDP up rapidly, and so also manufacturing. So where do I go? Like I said, it's a tough choice. So we have to look at, therefore, boiled it down to say which companies look like they're going to benefit the most in the next 2 or 3 quarters, and therefore go after those companies. I think that's going to be our approach in investing in this fund.
Right. It's challenging, as exciting as it looks. Well, Ashutosh, why Mahindra Manulife Balance Advantage Yojana then?
So let me say this, that, we looked at what will make us different. A lot of people who have come in the market, and they're good people, right? And they're doing a good job. But I heard people speak about the fact that they will make an asset allocation decision based on some kind of a quantitative technique or a trigger that some equation or algorithm will give them. The more I thought about it, the more we felt that, hey, that's not really right. People are giving us the fee they are giving us for using our intelligence, not boiling it down to a mathematical equation. And honestly, mathematical equations in the Indian market don't necessarily work out that well. There hasn't been any experience of quant models delivering any kind of outperformance of any kind, right? And if they do, well, in which case you should be paying for those quant models like passive, right? Why would you pay 2.5% to a fund manager? So we should use data, certainly, in all those four parameters, whether it is earnings, whether it's valuation or liquidity or yields. Look at the trend data, use our brains, but make sure there is a proper risk parameter in place where no decision can anybody run away with. Extreme decisions of allocation cannot be made alone. And I think we're the only ones who are going to follow the process. I think that's so important. And we developed it in discussion with our Manulife asset allocation team. They helped us to fine tune our approach. They have a large team that does this. And when we went to them saying, we want to use a quant model, they said, well, in which case, are you going to charge 0.5%? We said, no. They said, well, if you're going to use a quant process, that's what you should charge. So that put that perspective in place that, look, if you're going to use our expertise, then, well, use it well. And I think that's the difference. Putting the risk process in place and using the intelligence while using the data. I think that's a little different from the others. Of course, time will tell. We do have an asset allocation fund that we will be managing. It's an equity saving fund. It stands out because it's the top of its class in all periods. And I think we have a good experience in managing asset allocation. So I think we do a good job, hopefully better than some of our peers. I have no doubt that many of our peers are very, very well managing companies. So it's a tough ask, but yeah, I guess we'll get there.
Right. Ashutosh, what would be the deployment strategy for the NFO as the markets are currently trading at their lifetime highs?
Yes. So therefore, what you're saying, asking is how much money would I put in equities? Right. Now, when somebody asked me this question day before yesterday, my answer was, well, I think I would be invested about, and day before yesterday, if you recall, we had a 900-point drop in the market, right? At which we were almost 12% off the top. And I'd said, maybe, I'll be happy to go with 35% yet, 35 to 40%. Today, my answer is, well, maybe, since the market has come back to being about 7 or 8% below the top, I would still say 30 to 35% is where I would be, because I think there are going to be more opportunities in the drops in individual stocks, where we will see some of the stocks which are valued very richly. Maybe they may offer a window as the earnings season closes, and maybe the allocation that we make in January may look very different. And quite honestly, this money we will actually have in January, which will be a good time to have it because we'll begin to get a very good sense of the earnings. So it could completely change. If I find that some of the companies look like they're going to grow much faster than they have been, well, we may just make a larger allocation to equity at that point in time. Like I said, we have to watch the parameters and take a call. It's at today, yeah, 35, 40%. That's where it would be.
Right. Very lastly, Ashutosh, then what would your message be to retail investors who are waiting on the sidelines for a correction in the markets?
I would only say this, sir, that if you are waiting for the correction, you should know more money is lost waiting for a correction than in a correction in the equity markets. There is no room for waiting. You don't want to jump in, well, start an SIP, right? And buy every aspect, every part of the market. I mean, every high, every low, and you'll get a pretty good buying price. So don't sit around waiting. That never got you anywhere, right? Didn't make any money. So if you're at all interested, you should jump in, maybe start an SIP in a balanced advantage Yojana and see how it goes. That's how you make money, not by sitting outside.
Right. Thanks, Ashutosh, for that insight. Of course, if you were waiting for a correction early this year, you'd probably still be waiting on the sidelines. Well, that's everything you need to know about Mahindra Manulife Balanced Advantage Yojana. The NFO opens. If this is of interest to you, please ensure you invest in this one. Thanks for that. Thank you, Ashutosh, for joining us on the show.
Thank you, Sabina.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.